welcome back to the channel. Recently, Pershing Square Holdings released their 2020 investor presentation. I wanted to make a quick summary about the presentation and the key points that stood out to me. Bill Ackman runs a relatively concentrated portfolio despite having billions under management. Now, this may not seem like something very positive to a lot of investors, but to me, it makes perfect sense, since it's exactly how I like to structure my own portfolio. The reason that I have Pershing Square Holdings in the portfolio is because there are several short, intermediate, and long-term catalysts at play, along with a significant margin of safety. Bill Ackman's approach to portfolio construction is also very defensive, which means that performance is less impacted as the market falls. But as the market rises, his portfolio may actually tend to lag the market in terms of performance. We'll go over all of this as it's covered in the presentation, but first, let's start with the fund performance. The return of 70% has been the highest return since inception. The return was largely due to the CDS hedge that delivered an exceptional return and also allowed Ackman to buy into deeply discounted securities during the March dip. As mentioned in the presentation, the hedges generated $2.6 billion in proceeds across the Pershing Square funds while incurring $27 million in carrying costs. The $2.6 billion was reinvested in Starbucks, Howard Hughes, Lowe's, Hilton, Restaurant Brands International, and Agilent, all core portfolio positions whose stock prices had been significantly impacted in March. The next thing I wanted to cover in the presentation was Pershing Square Holdings, the SPAC, the Special Purpose Acquisition Company. This is the largest SPAC ever created. Now, although this might be an attractive selling point for a lot of people, in my opinion, when it comes to SPACs, it makes sense to have a smaller SPAC since it's easier to find a potential target to merge with. Now, maybe Ackman already had a potential target, and that is why he chose to raise such a large SPAC. In a previous video, I had mentioned that PSH has forward purchase agreements in place that would allow the fund to buy into PSTH at the IPO price of $20. This is a huge hidden margin of safety that is not included in the stock price of Pershing Square Holdings, in my opinion. We could see a significant surge in the net asset value of Pershing Square Holdings whenever a deal is announced for the SPAC, causing the stock price to follow. Recently, Ackman mentioned that he had plans of launching a second SPAC, implying that there's a possibility that there's already a potential target for Pershing Square Holdings. Another point that I wanted to discuss was the return of capital through dividends and share repurchase. PSH has a 1.1% dividend yield, and in total, $81 million was returned to shareholders through dividends. In addition to the dividends, $286 million were invested in share repurchase. This translated to 6.6% of the outstanding shares being retired in 2020. Now, like I've mentioned in previous videos, there are a combination of factors that make me think that Pershing Square Holdings is a fantastic investment opportunity. In the short term, we have the discount to net asset value, the upside from the SPAC, and the consistent return in the form of dividends and share buybacks. If you are interested in going through the presentation for yourself, you will find the presentation in the description. I'll include a link below. So do check it out if you are interested to see it for yourself. Let me know if you find any other interesting information about Pershing Square Holdings, and if you've got any questions, then do feel free to share them in the comments below. Hope that you like this video, and thank you for watching.